Heavy is the head that has to manage all of this.
Hey everyone, welcome back to my channel.
We're now incentivized to buy what we already buy.
Fumbling through college had me building.
I also got some done on the other side.
And that was right around, I would say, May, maybe, right before renewing the lease for this property.
Welcome to the channel, Martha.
Thank you for having me here.
Oh, I was going to say, I am getting up in their names, I'll tell you what.
Bills paid by other people, life was never this good. I had to step back.
Hey everyone, welcome back to the channel. Do you want to be the first person in your family to get financial freedom, to claim financial independence? Do you want to be the first one to move towards generational wealth? Well, you came to the right place, because today this is exactly what we're going to talk about. You see, trading and investing has been around way before I was alive. And the reason why I love investing is because historical data can back up historical returns. I love history. They say a wise man learns from other people's mistakes, and they also say that history repeats itself. And so what I like to do is I like to look at what is old, what is true, and what continues to work. So I absolutely love the stock market for this reason. And it is one of the reasons why many people are still able to retire today. You see, in the past generations, they may not have had the knowledge or understanding to master the stock market, understand the stock market. But if you're 40 or younger, you definitely have time. You definitely have the ability to say, you know what? I am going to lock in. I'm going to understand. I'm going to learn. So for the next 10, 20, or 30 years, I'm going to be able to garner 15, 10% returns in these markets and set myself up for a good financial future. You see, most people will not make up even 70% of their income in retirement. 70%. So if you make $100,000, it is very unlikely that you're going to have even $70,000 in your retirement age per year. And the reason for that is lack of investing, lack of foresight, and lack of reserves that are being put aside for your financial future, to claim your financial independence. You see, there's many, many ways that you can retire once you have set your sights on something and your ambitions on something. And as for me, I constantly strive to be greater. And so today I'm going to tell you exactly how I go ahead and do those things. You see, so my first goal was to buy a home, claim stability within that home. And then after paying it off, I would then coast through life. Coast through financial freedom without a care in the world. My main reason for financial independence was not because I wanted a big home, was not because I wanted to show off. It was simply because I didn't want to have to answer to anyone. I didn't want to have to answer to anyone. I wanted to be able to speak my mind at all times, and any repercussions wouldn't be harmful to my life and my financial independence. And so my reason for financial independence is to be my true and authentic self at all times, where other people have to mute themselves, where other people have to acquiesce to the desires of others, where other people have to conform to the beliefs of others. I decided that, you know what, it's not worth it. There's no money in the world that is worth me not being myself. And now, granted, do we change over time? Yes. And do we start to take other people's feelings into account depending on the person? Yes. But the main thing, who you are at your core is the reason why I decided to claim financial independence. Now, it may be different for other people, and that's just one reason, right? We may have several reasons. I also want a stable family. I also want to be able to provide long-term and sustain that without stress. And again, the key word is stress. A lot of people can provide for their family, but it comes with a lot of stress. And that's not what I wanted in my life. I didn't want to stress over things like finance when raising a family. And so How do you get started in the stock market? Again, when I first started in the stock market, I had no more than $2,000 to invest in the stock market. When I started to open another account, I invested $200 and started from there. Now, even bi-weekly, I invest $50 every 2 weeks. And then sometimes I'll put a lump sum into the stock market in order to, take advantage of certain opportunities. What is an opportunity in the stock market? An opportunity is when the stock dips significantly. So I'll be open and honest with you all. Within a month, my stock price dropped, not my stock price, but my market account, my money market account dropped by nearly $6,000. Nearly $6,000. But in a week, it also went up $1,000, right? So over the course of a month, it was down $6,000, but in a week, it's gone up $1,000. So if it didn't go up $1,000 this week, I would be down roughly $7,000 for the month, right? Now, obviously, all time I'm up significantly, but the reason why a lot of people are scared to invest is because markets go up and down. You see, you cannot only bank on markets going up every single day. There are days where my money goes up $2,000, $6,000, right? $4,000. As drastically as it may look that it's going down, it's also going to go up a decent amount. And that's why you continue to dollar cost average into the market. That's why you continue to invest, because I know long term that if I pull my money out at this point, I basically lost $6,000. And for what? For what? Over the course of a month. It makes no sense, right? So instead of losing money, you don't lose money until you sell. And when you know that your companies are going to rebound, when you know your companies are set for stability and profitability long term, when you know that people have to retire and all their 401ks are invested in the assets that you're investing in, they're going to continue to put money on top of my money, even if they don't know that they're doing it. There are plenty of people working for cities in New York. There's plenty of people working for cities all over the world. There's plenty of people just simply working any job that provides a 401k. A lot of the time, they're going to have private company stock, but also they're going to have the S&P 500. They're going to have VOO. They're going to have a lot of these companies that I'm also invested in that's going to provide immense value for me, and that I know over time I'm going to garner more returns than that $6,000 that is projected to be a loss if I were to sell, right? And then another thing is that people don't know that they can write off some of their losses if they were to sell in their taxes. But as for me, I already can see what's going to happen. I know that before the end of the year, that money will be back and roaring once again. You understand? And so it's having the stomach to withhold certain things and understanding what is your risk tolerance. I call myself a medium risk investor. I invest in a ton of stocks. If I was to invest in a lot of bonds, that would be low risk. Government-backed securities are very low risk. You are basically betting on the government to pay you back. And I think that that's a safe bet. And that's why they pay so little. And that's why they grow so little. But when you're looking at businesses like Amazon, Google, Tesla, Facebook, whatever the case may be, whatever businesses you like, McDonald's, right? Those businesses can go up and down depending on the CEO, depending on how much money they're making, depending on how quickly they're willing to build, depending on market trends, menu items, or whatever it is that they decide to venture into. And so with that being said, it's going to be a lot more volatility. But if you believe in a company and what they stand for and where they're going, then obviously you stand to gain from what it is that they may be able to accomplish. Right? There are CEOs that may talk a big game, but then they don't accomplish anything. And that can be very detrimental to your assets and your wealth and your financial future. And so a lot of people would stay away from investing in single stocks, especially if they don't know too much about it. But one thing I will tell you, if you didn't get anything from this video, is that investing in your 401k, especially if there's a company match, is going to be absolutely beneficial to you. absolutely beneficial to you. You will at least have some cushion in retirement by investing in your 401k and not pulling that money out early. That company match is also free money that you're getting. So if you've been looking for a raise, if you've been looking for an increase and you're not investing in your 401k, you're already leaving money on the table. Go ahead and start investing in that so that you can provide for your financial future. And then lastly, I want to say is that you cannot be afraid to try new things. Now, of course, you should do your research. You should understand what you're doing. And sometimes you have to start off small. Another thing that I always tell people is to don't invest in things that you don't know. Start to learn the companies that you're investing in. Take pride in those companies that you're investing in, and then work towards investing in them gradually. And if you don't know anything, then stick to the ETFs like VOO and SPY. Now, I am not your financial advisor. I'm just an average guy on YouTube. But those are ETFs that encompass the entire stock market. So if you believe in the USA, if you believe in America, then those are the ETFs that you would invest in because it encompasses all of basically the top 500 companies in America. And so you're going to get historically at least a 10% return after a 10-year period of time. Now, if you like this video, make sure you leave a like, comment, and subscribe to the channel. You know I try to post every single day at 8 a.m. daily on YouTube, Rumble, and Spotify for podcasters. And I can't wait to see you in the next one. Peace.